Hey, this is John Campanelli, editor of Waste and Recycling News, and I'm honored to have in our booth Michael Hoffman, analyst for Wunderlich Securities. How are you doing, Mike?
I'm doing great, John. Thanks for having me.
Waste Expo, it's the biggest time of the year for people to get together and cut deals. So what's the show been like, and tell me what you can tell us.
Well, I tell you, the mood is actually pretty good. I would say most people would say business is good. It's not great in that this has been a no volume recovery in the solid waste industry, and that's been a struggle for a lot of the companies because most business cycles you have volume starts to pick up, usually driven by construction, and that rising tide kind of lifts all boats, and it allows for a little more rational behavior around the pricing environment. And I would suggest to you that pricing, which is always competitive, is probably a little more competitive, a little more intense, particularly in large chunks of volume. So the municipal market or big national accounts, you're seeing a little more intensity around that pricing. Certainly municipalities are trying to seek some relief either through the rebidding process or coming to their vendor and saying, hey, I need help given the tax environment they're in where tax revenues are down. From a business, you mentioned deals, a business opportunity. I would say the last few years, 4 or 5 years, you might not have seen as many deals done at Expo as you did in the 90s through maybe the early 2000s. This year seems different, and I think part of that's driven by the fact that capital gains taxes, it's no longer a question of are they or is it a chance they're going up? They're going up. It's now a matter of how much and when and how often. I think it's going up at least 5 points, and it's probably more likely 10. And the real interesting challenge is, will this be an issue for 2012 because you have to get a deal done this year? Or will the political environment allow this to extend into 13, change it in 13 to be effective for like January 1st of 14? And so you, in fact, really actually have all of this year and next year to figure out whether you're a seller of your business.
So when are we going to know if that's going to happen?
I think it becomes a political issue this summer as the presidential election. The current president has put in the budget that he submitted in February an increase in the capital gains tax rate. He's clearly run on it so far as a messaging, and I think there'll be some action on part of the Congress around the subject of both the dividend tax rate and the capital gains issue to try and make it front and center in the election. I'm in the camp that thinks that if you're going to sell, you got to get it done in 12, because I think there's too great of a risk that if the Democrats win, they'll make it effective January 1st, 13. Because it sunshines, right? This expires on December 31st. They don't actually have to do anything.
Okay.
It just expires. So the real question is, will they reverse it? And what would be the effective date of the reverse, if they did reverse it? And right now it goes to 25%. It goes from 15 back to 25 automatically. And so earlier this year we did a report with your help about the numbers. This is going to be a big year for acquisitions. Are we still on pace for that? I think so. Okay. Certainly if you listen to the publicly traded companies and they talk about their acquisition activity, they're talking about pipelines, and they define a pipeline where they have a confidentiality agreement signed, they're in a negotiation, a true discussion, it's not just tire kicking. Most of them are talking about numbers of transactions or total revenues that are 2 or 3x their normal sort of activity level, which supports this thesis. My thesis was we'd see the largest number of deals in sheer number of transactions, not necessarily dollars, because the Republic-Allied merger was bigger, but you could see a lot of family-owned businesses that are faced with a estate planning issue effectively. And if you're looking out and a seller of your business in the next 3 to 5 years, then capital gains are a real factor, and you better take that into consideration to the analysis. And whether you choose to do it now and gamble that maybe multiples will go up or your EBITDA will improve, and that'll offset the difference in the tax rate.
How does the stagnation, the volume stagnation, the fuel prices, and that pricing pressure, does that have an effect on the merger acquisitions also?
Well, I think it does in the sense of what's your long-term view of the economy. So I'm in the camp, my firm's in the camp that the U.S. economy is in for structurally low growth for the next decade.
Okay.
And low growth is defined as 2 to 3%. Between our corporate tax policy and the regulatory costs that overlay our economy broadly, not just environmental, but broadly, we have made this a less attractive place to put growth capital to work. and it's that incremental growth capital that drives the jobs growth to a level that would support an economic GDP number that's 3, 4, 5% instead of 1 to 3. If you're in a 2 to 3% economy, given our sort of about 1% population growth, you're looking at it kind of structurally about 1% volume growth is what should be happening. I think you'll see volume start trending that way in 12, not for the whole year, but on a run rate basis. The data seem to support that coming out of the second half of 11, that we're moving back towards, because we're 3 years into a recovery and the consumers kind of found their behavior related to that recovery. That'll help, because I think you get a little volume in the container and everybody relaxes a little bit and says, okay, maybe maybe it's not so important that I find that incremental ton somewhere else by taking it from somebody else, because you can't manufacture incremental trash as a garbage operator, right? It is what it is. It's driven by the economy and population. So how that stimulates behavior is, what's it mean to your view of your EBITDA? Is your EBITDA is a certain amount today, how much would it grow if you waited and didn't sell, waiting for the, and let the capital gains go up? Your EBITDA's got to grow a lot faster to offset the tax loss because of the higher tax rate. Or deal multiples. What are happening with deal multiples? At the moment they're fairly stagnant and relatively low level. Veolia will be interesting how that gets priced.
I wanted to ask you, there's a big for sale sign in front of that booth. What is your prediction? What's going to happen here?
Well, it will get sold because the French have made a commitment. They're a seller of the business. So now the question is, what price will get paid for it? It's my belief that the deal is structured in a manner, or the approach to the selling of it is biased towards private equity. Strategic companies don't tend to fare well in auctions because they have a host of issues, particularly if they're public, that private equity can avoid, I guess is a good word for it. Private equity tends to have a shorter investment horizon. If it's strategic, you're buying it and in theory owning it forever. So You've got to think through landfill liabilities. They're fully accrued. I don't think there's any accounting issues, but there's not cash reserve, so that becomes it's a liability, becomes like a debt aspect of your analysis, so it limits what you can pay for it. Well, private equity is not going to own it forever, so maybe they adjust for that differently. It's 30% unionized with multi-employer pension plans that are underfunded. That's a liability you got to deal with. If you're a strategic, you're owning it forever, you're going to have to deal with that, right? So how does that factor into your ability to what price you could pay? Private equity can treat that differently, or choose to treat it differently.
So we're looking private equity. You're probably this summer?
Well, so first round bids were due last night.
Oh, okay.
And I've heard through back channels that there's 10 to 12 bids came in. 2 or 3 strategic, rest was private equity.
Wow, okay.
It'd be a guess on my part who the strategics are. So it's purely guessing. I don't have any basis of fact, so I would just avoid that.
Okay, but what about the number? What do you think
I'm in the camp that everybody realizes that this is not a distressed seller, but they're selling this business. And maybe you don't have to reach. So I think the range is going to be somewhere between 7 and 8 times enterprise value. And there's a lot of people think that's 8 to 9. Well, so it's
1.5, 1.6, or
what do you got? 230 million of an EBITDA, so 1.6. 1.6 to 1.8. It'd be full, total value. This is a guess on my part. There's about 700 million debt on the balance sheet already. So, you're talking about writing a check for 900 million to $1.1 billion in equity, or writing a check. Credit Suisse and Barclays are leading this. Credit Suisse is leading it. I think Barclays is involved. I understand that the commercial lending side is willing to lend into the deal at about 5.5 times levered. So if it's 700 million, if I'm right at 700, it's approximately 3 times levered. So you can put 2 turns more of debt on this, which basically means you could have about $1.1 billion, $1.2 billion of debt on it out of the whole deal. So if you've got 700 million, it leaves you 500 million to sort of incremental debt, and then you got to come up with a $500 million check of equity.
That's really interesting.
That's kind of the math. There's not a lot of people who can do that, so that does limit the pool too, of who can buy it. I've heard that some of the bigger private equity firms like the KKRs of the world or what have you are passing on it. They're not playing, but I don't know if that's factual. I've just heard it through chatter on the floor today.
All right, so last year, you touched on, after the Oakleaf Waste Management deal, there was some talk, and you hinted at it in some of your reports, about a Republic Progressive working together. Is that still something that could happen? And tell me, if not, is there something that could surprise us this year?
Well, so one of the things I like to do in my work is just think strategically. I sort of step back and I go,
and you've been right.
If you're putting an A and a B together, who would you put together and why? What's the logic of that? And I look at what Progressive has as businesses, and I look at Republic and I go, first off, there's some very natural overlaps that make sense. In the U.S., Republic would love to have those Florida assets. I think they'd not want to be in New York at all, so they'd exit that. But they'd keep Seneca Meadows, which is in upstate New York's the landfill. They're in Pennsylvania, so I think they'd figure out what to do with all those landfills. You might end up mothballing some at the moment, but you'd have capacity that you wouldn't mind having. There's one in Bethlehem and there's one in Chambersburg, Pennsylvania. They're in the Baltimore-Washington corridor, so you'd keep that. The stuff in the South, what I call the Old South, in Louisiana and Texas, they're in those markets. So there's probably some overlaps that have to deal with, but they complement you, right? So I think there's some synergies there. And then, BIN we all use BIN as the ticker, is got a very nice Canadian business. It's got terrific profitability, got great market share concentration, and Republic's not there at all. So Waste Management's there. This is now, I think, about the second largest, but it's probably a coin toss between them, between Progressive and Waste. Okay. And there would be Republic now with an equal footing in a big market.
So it's still making a lot of sense.
It makes sense strategically. Do I think it happens? Probably not. What I believe Republic is, and I say this with all due respect, because I think this is a good thing. Republic is going to be boring us in the sense of they're going to do what they did for 10 years as Old Republic. They're going to manage for cash. They're going to drive the cash out of the business, which drive through running the business as well as they can to produce high returns on capital and produce a lot of cash. They're going to give almost all of that cash back to shareholders in dividends and share buybacks. And in the second generation Republic, the new Republic after the Allied merger, there'll be more acquisitions in the model because they have so many landfills. I've always had this belief that there's $250,000 to $1 million of collection revenue around every landfill. That the big guys, it's a collection of independents that you buy and roll those customers in, and that's that diet of tuck-ins. Well, they've got 180 landfills, so if there's $500,000, you're doing $90 million of revenues every year of acquisitions. That's kind of the diet. Call it 1.5, 2 times revenue, so you're spending $150 to $200 million a year. Well, that's kind of what their budget is.
Okay. Well, thank you so much. You're just a fountain of knowledge, and we'll see how you did next year with checking with these predictions.
Okay, very good. Thank you.